Good morning from Los Angeles. It's Alissa, Coram, and Ed Carson here, back with your market update. And on today's show, we're going to be previewing Apple earnings out after the close, also taking a look at Pfizer after its quarterly earnings report, and checking in on relatively recent IPO Pinduoduo. But first, let's take a look at the major indexes. We're tracking mixed right now. The Nasdaq down about 0.2%, the Dow leading the gains, up about 0.6%, and the S&P 500 up about just 0.1%. So digesting a little bit what we saw yesterday.
Yeah, I mean, it seems like most of the big winners are you know, some of them are earnings related, but they're often the ones that are below their 200-day lines, and so there's a lot of bottom feeding going on.
Right.
But again, all the major averages are above the 50-day line, so everything is, you know, looking okay. The Nasdaq here, you can see that, you know, the 50-day line just above, you know, just below there, where the averages are. So, you know, there's a lot of earnings tonight, tomorrow, Thursday. There's the Fed meeting beginning today. China trade talks begin tomorrow. There's a lot going on. So, I mean, I can understand why investors wouldn't want to make a big bet long or short right now.
All right. Well, some potential catalysts coming up and here for sure. And checking in on Apple heading into its quarterly report, shares up about just 0.4%. Heading into the report, it's near its recent lows, although it has come a little bit off the bottom. But analysts are expecting earnings to rise 7% while revenue falls 5%, and this comes after a pre-announcement of, or a warning, I guess I could say, in early January from Apple about essentially the impact on China.
Yeah,
from China.
I mean, it was one of the big warnings on China. I mean, we saw it with NVIDIA, Caterpillar. I mean, it's a big issue. I think investors are going to be looking at more about the guidance going forward. I mean, analysts are expecting declines on earnings and sales for the next 3 quarters. You know, is China going to turn around? What's the strategy? Can, you know, because they were really milking the higher prices, and it seems like, especially in China, that's not going to work. But I mean, if you look at the stock, obviously a lot of damage, and yeah, it's bounced back a little bit, but really, I mean, if you look at the relative strength line, that's the little blue line down in the chart there. That's really not risen much since the January 3rd low. I mean, really, Apple's sort of been bobbing along like an apple with the market rather than really like powering ahead. So people say, oh, Apple's bottomed. Well, the market is bottomed.
Right.
But that doesn't really, I mean, there's nothing really particularly impressive about what Apple's stock has been doing.
Yeah, so not only can the relative strength line be a tell when a stock is breaking out, but also how it's moving when it's trying to recover.
Yeah, absolutely.
All right, and now we want to take a look at Pfizer shares, up about 1.2%, but hitting resistance after the quarterly report. We did see an earnings beat, a narrow one, but the guidance was pretty weak. So after we saw Pfizer breaching the 200-day line in yesterday's session, now some resistance there. Yeah,
I was hitting there. One of the interesting things is that Pfizer was one of the strongest performers on the Dow last year, especially in the second half. Merck was #1 and Pfizer was #2. But, you know, really when you look at it, this is a monthly chart on Pfizer, and you go, oh, look, the stock is rising. But then there's the blue relative strength line. Basically, Pfizer has pretty lackluster earnings and sales for a long time. It's been a problem for a lot of the big pharma. You know, Pfizer's been underperforming the S&P 500 since basically 2001. So, yeah, the stock is going up, you know, for the last decade or so. Really, you know, there's a lot of better performing things to look at.
Right, exactly. I think that's a very good point. You always have to be nimble. Just because something performed well one year, it doesn't necessarily mean it's going to perform well the next year. And I like being able to look at the big picture here with the long-term performance and the fact that it still hasn't retaken its all-time highs from the late 90s.
Yeah, and I think one of the issues is it's like, oh, look, Pfizer's safe. Well, I mean, you know, like, well, maybe it's safe, but if you want to safe, why not just buy the S&P 500 like an ETF or mutual fund, I mean, which is performing better and is presumably safer than Pfizer.
Right. Well, one area that may not be seen as safe, a little more volatile, are recent IPOs, but one that is doing really well is Pinduoduo. The ticker there is PDD, and we're seeing a gain of nearly 4% today in above average turnover, extending gains after a recent breakout from a cup with handle base here, but that base was pretty deep.
Yeah, I mean, part of that's because of, you know, it's a recent IPO and we got a bear market and China stocks were especially hard hit.
Right.
But it was a 45% drop, and really the models in our history shows that stocks with cup bases that deep, the breakouts just don't tend to work very often. I mean, maybe this one will work out.
So far to climb back up.
So far to climb back up, there's just damage. It just doesn't seem to work. I mean, there's a reason. We focus on patterns that are most likely to work. This one may work just fine.
Right.
I mean, that's not it. Pinduoduo is actually backed by Tencent, which is the big rival to Alibaba overall. It's among a few stocks that are in that field that are doing well. It's supposed to turn profitable next year. So there's reasons to look at this stock. Maybe it'll pull back and form a more normal base.
Right.
It's definitely extended. Even if you think this is definitely going to work, it's well extended from that breakout anyway. But it's definitely an interesting stock, especially if you're looking to see if China can bounce back.
Right, exactly. Maybe a signal here, and it's nearing all-time highs, just below its all-time high reached after an attempted breakup from an IPO base that ultimately failed in mid-September. But the handle there, that if you're wondering, it's not showing up on the pattern recognition there, but the handle entry was at 2680, and a good reminder that IPOs, even though they can tend to be volatile, a great space to watch, as it's an opportunity to get in early in a company's growth story.
Yeah, that's really, and when we talk a lot about some of these things, if you can get in early, there's the much bigger gains there. I mean, like there's some of these other stories, yeah, they may be great stories and they may continue to run, but right. their best days may be behind them. Maybe the best days are ahead. We'll see if it has any days ahead, but,
right.
But it's looking promising.
All right, yeah, we'll definitely be keeping our eye on that. And for all other stocks that we are keeping an eye on, be sure to head to investors.com throughout the trading day and after the close is where you can find our top-notch stock market news and analysis. You can also find our content across social media. We are on Facebook, Instagram, YouTube, and Twitter, so make sure you are following and subscribing for all the latest, especially YouTube. Make sure you are subscribed. We have some great stuff in the works and can't wait to share with you all. Potentially, the closest thing on tap would be another AMA. We had a great AMA, so for more content like that and other educational videos, make sure you are subscribed, and that way you'll get notifications whenever we have new videos. Thanks so much for watching, everyone, and we'll see you back here tomorrow.